Okay. So we have Alex is there. Okay. All right. In the morning session, we have discussed about corporate governance, how the corporate governance comes and what are the importance. Now we'll be starting with internal controls. So basically, what is internal control? We want to understand internal control. We have to go to the first chapter. What we are doing there? We are trying to find the risk, then we are trying to mitigate it, and we are trying to mitigate in a proactive way. So when we try to do something in proactive way, we'll design some plans for it. We'll design some controls for it. So in a way, we can say internal control is a way of managing risk in a proactive way. We are trying to control the risk. So what they have defined here is the whole system of controls, financial and otherwise. When you talk about risk management, it's not only about fraud or any wastages in manufacturing. It can be financial or anything. The whole system of controls, financial and otherwise, established by the management in order to carry out the business of the enterprise in an orderly manner and efficient manner, ensure adherence to management policies, safeguard the asset, prevent and detect fraud error, secure as far as possible the completeness and accuracy of records. So ultimately, it's just about planning and execution all types of risk that will come under internal controls. Why we called it internal control? Because we can just control what is within the organization, what is within us. We cannot control what the stakeholders are doing and how we are dealing. For that we can have a policy, but here we are focusing more on internal control. And internal control and internal audit is connected, so we'll have internal audit also in the following chapter. But external audit can be a little bit separate, and it will be more of compliance and everything, which is not part of CIMA syllabus. In ACCA and other qualification, external audit has been covered. So we just need to worry, concern about internal audit. And internal audit is again part of risk management. It is done from the risk perspective. Okay, so basically what we are studying in P3 from chapter 1 till end, all are interconnected. Okay, so the uh, plan what I told you guys to make a 50 risk and mitigation, which will include all types of risk. Ultimately, we are covering entire P3. Okay. Now, they have given again COSO model as an internal control. These things we have already repeated in chapter 2, COSO, risk assessment, control environment, information communication. So for internal control also, we can use COSO model. Same thing. Okay. Next thing is in order to put internal controls, obviously we need to know the risk. For example, there is a risk of same person. Let's say a person is ordering goods for a company, and the same person is receiving it. So there is a chance of fraud that that person will order less, right, and show that they have ordered more, and the same person is receiving. Let's say he ordered 10 units on the paper, and he received also 10 units, but in the inventory there is only 9 units. Why? He has just taken over 1 unit to his home, something like that. So what you'll do for that, or what companies usually do in that, in your experience, they do segregation of duties, maker and checker. Order one is someone and checking one is someone, right? So what do we do? In short, we try to have different types of control. For example, nobody should come into our office who is not an employee. So what you will do? You'll put a security guard. You'll put somebody to check the identity card. Now we'll have this fingerprint system. So what you have done? You have put a control, right? Then another type of control is if somebody wants to take a leave or something, then they have to go to the supervisor or manager. Then if you want to change the bank address of a vendor, then it will go to the senior manager. So these are all set of policies, isn't it? So where it is coming from? It is coming from internal controls. Basically, these are all controls. When you talk about background check, our company can also be part of that. What is background check? It is also a risk management, isn't it? What type of risk management background check is? You're looking at the employee's background. Do they have any risk for the business from the previous experience? So according to the risk, you'll have a control. Are you getting the point? Hello?
Yes, sir. Yeah.
For example, if you have a credit risk, we'll go do the credit check, look at their score. However, some of the common internal control a company can have, they have given here. We are not limited to that. And there's a mnemonic also here to remember. This is known as soap spam. So what companies usually follow, I'm sure your company might also be doing it. Segregation of duties. One individual had responsibility for all of these activities. They could record fictitious purchase and pay themselves for transactions that had not occurred, which is fraudulent. Somebody will just create the ticket and pay also. Why? Because there is no segregation of duties. Second kind of control we can put is organization control. The separation of an organization's activities and operations into department or responsibility center, reporting lines, coordinating the activities with different departments or groups. Then third one is authorization and approvals, established to ensure that a transaction must not proceed unless an authorized individual has given his approval, possibly in writing. For example, if you want to change the supplier, the companies can have a policy, only senior managers or directors can take the decision. Personnel control is about training your own employees. So it can be selection, it can be training, it can be their working hours, it can be sometimes related to their remuneration or what kind of discipline you want to put on that. Supervision is another type of control. Oversight of the work of other individuals. This is very important in our business because what happens sometimes security people, especially in small firms, in night duty they will sleep. So there should be a supervisor who is just roaming around that area and checking if they are working effective. Physical control is used against the theft of unauthorized access and use. What kind of physical control? Will have a security personnel standing. You can have various kind of gates kind of thing designing, not allowing unauthorized sector, metal detector, depending on the thing you are saving. Arithmetic and accounting, sorry, should be arithmetic. Recording transactions properly in the accounting system, being able to trace each individual transactions. So here is using a software. For example, if somebody wants to put a negative entry in the inventory, so the software itself should not accept it. Why? Because it's not possible. So while designing the software, this thing or this type of control is decided. Last one is management control. The board of directors or senior managers might call for a performance report on the progress of organization towards its goal. So management control is overall, like we have a nomination committee, remuneration committee, they can also put certain controls. Okay. Can you give one example what kind of control is uh, very obvious in our organization, in our industry?
Personal controls, maybe. Hiring, training.
Very good, Alex. Personal control is very important because every project is different, every country is different. So hiring, selecting, training for specific roles. For example, if you're providing security for banks, it will be different. If you're providing just office services, it will be different. Yes, Pooja.
Sir, I'm seeing the segregation of duties as well as uh, uh, authorization approval. Apart from
Physical.
that, management control is also there in all companies. Arithmetic, accounting, that is also there.
For us, what do you think can be an important one?
For us,
Physical.
can be arithmetic and accounting
Okay. What kind of arithmetic accounting?
as well as authorization and approval.
Any example of authorization and approval in our industry?
Uh, for
In
example,
exam, if you want to get good marks, always we have to give an example
mhm,
relevant to that and justify it. Not general example, but relevant to our case.
mhm. Like if we have to do the means we have to give security to any particular client, then in that case, firstly, there is authorization approval. Only then the means we would assign our security guards or else risk assessment, else consultants. Only authorization and approvals. And physical controls are there. In our case, physical control in security, because we are a security company, is
Yes.
also a main
Right.
thing.
Unauthorized access. Protect against theft. And so.
Right. This we have to do for our own company, and this can be used to provide for our clients also. So these are just basic controls, but obviously the controls goes beyond this. Then this chapter is just about finding the controls. But remember, we can only find a suitable control when you know the risk, isn't it? If you don't know the risk, how you'll decide what kind of control is suitable? For example, financial control. This control express financial target and spending limits. Example include budget. You should not overspend in marketing. Controls over sales, purchase, payroll, and inventory cycle. Overspending can happen many times if you see the budget goes up. Then we can have non-financial quantitative controls. These include focus on target against which performance can be measured and monitored. Like balance scorecard we have seen. It can be total quality management, quality measures, anything. Feedback loops can be there. Performance target, actual result recorded, compared with target, control action. Any type of control the organization can set according to the need, according to the business, according to the industry. Non-financial qualitative controls, for example, can be day-to-day controls over most employees in organizations. Like training is there, controlling method is there, physical control is there, project management is there. What specific in that, we'll know only if we know the case. But these are the example of financial and non-financial controls. Okay. But we have to remember one thing. Control is a part of risk management. And we know that risk can only be mitigated, it cannot be avoided. It can help us to improve the chance of success, but we cannot say a business has good risk management and this business will be successful. This business will always win over competitors. Can we say that? No. Why? Because a good internal control system cannot turn a poor manager into a good one, right? Can we just select any strategy and say that a good internal control or good risk management will turn our strategy into good one? No, right? Cannot turn a poor manager into a good one, a poor skill director into a good skill one. This is just a upside risk management, we can say. The system can only provide reasonable assurance regarding the achievement of objectives. All internal control systems are at risk from mistakes or error. Whatever internal control we have, there is a small chance there should be risk or errors. In last exam, we got question in one of the variant saying that shall we declare to our clients that we cannot control all the risk? If you just look at the situation, the statement, it looks like yes, that's true, we cannot control all the risk, but we are providing a security kind of service. It was more of IT security that time, and if you disclose such information, it will give a negative perception to the clients. But at the same time, if you say you are controlling 100%, that's also not exactly correct. It's not ethical. It was again a discussion question. You have to say some points in favor, some points in against. Or a better way can be you can agree, yes, we'll control all the risk, but you can put some conditions apply. Why? Because always there will be some mistakes or other that can happen. Then internal control system can be bypassed by collusion management over it. What can happen? The directors themselves can override the management. Because let's say a director itself is not showing the ID card or doesn't have anything, the operational employees cannot stop that person coming in or using certain things. The management can always override it. Controls are only designed to cope with routine transactions and events. This is very, very important. This is why we do scenario planning. Imagine if something that was not expected happened. Do we have the plan for it? No. That's another downside of it. Then there are resource constraint in provision of internal control system limiting their effectiveness. We cannot have so much of control, so much of physical security. We might have to find a cheaper option where we can save the resources. Otherwise, company can spend so much on internal control and they have to compromise on the profit. Let's say a small company, they might also have some cyber risk. But do you think they will spend so much like a company as big as Saefwell on their cyber security? No. Why? Because of the resource constraint. Okay. Then fraud, we have already seen what is fraud. Dishonestly obtaining an advantage, and it is coming from opportunity, motive, and dishonesty. So this is also a risk we need to control. And in fact, many times there is more risk from inside than outside. So what we can do? So just like any risk, even if you see how government or emergency services work, for example, police also, what they want to do? They want to prevent first. But 100% risk cannot be prevented, so they'll try to detect it. And once they detect, they do a response, punishment, or whatever it can. Same things we can do in a company. Using COSO model, control environment, risk recognition and assessment, assess the scale of risk, control activities and procedures. That is prevention. Basically, design internal control. But again, some places internal control will not be very effective. That time you have to detect, perform regular checks, warning signals and indicators, whistleblowers. So don't assume that everything is prevented. Always keep on cross checking. Then fraud response, internal disciplinary action you can take. Civil litigation for recovery of loss, asking for the finance. Then third one, criminal prosecution through the police. If it is something serious, you can even report to the. Very logical if you see. Prevention, detection, response. Investigation of the fraud if you want to do. So what companies can follow? First, establish the facts. Always establish fact is important. Sometimes we have just heard from someone or the management feel or the other employees are saying we should not believe. We should work on facts. Establish the exact facts. Establish how the fraud occurred. Obviously, we are talking about internal fraud. Somebody from our own team has done that. Establish how the fraud occurred initially went undetected, why it was not detected so long, or somebody internally involved in that. Where the internal controls weak or inadequate, or the internal control bypassed, this is also a chance. Consider whether anyone else might have been involved in the fraud. Establish or estimate the size of loss. Technically, even if it is $1, we should, uh, do the fraud investigation. But companies, they will just follow the risk and return, or investment or return. For $1, they don't need to invest so much time and money. So many times, if it is a small fraud, they can ignore it, or they'll just not do the complete ignorance. They will not do the policies and everything, but they will just improve on the internal controls because they feel like in safeguarding it or going to the exact person, it might be even more costly. That was a small section. Any question on this?
No, sir.
So basically, the major summary, the ultimate summary of this chapter is, for every risk, we should have internal controls. Every risk, I don't think it's possible, but almost every risk we can have. Internal risk we can have. External risk, can we have control? No. We cannot have control on government changing the regulations. We cannot have control on the economic situation. But what is internal can be safeguarded. Next section is internal audit. Okay. Then we'll start with cyber security. All right. So just give me 1 minute, then we'll start internal audit. By the time, if you can think of any risk and a control, you can do. Okay. Think of any risk internally which you feel is specific to us, and try to put a control on it. I'll just take 1 minute, 1 to 2 minutes. Yes. Have you thought of any specific risk and a control for that?
Maybe in the security industry, there's a huge risk um, in collusion, and that needs to be managed by strong background checks on security guards, as well as strong oversight controls, as well as huge consequences, um, like maybe they can be charged criminally as well as fired. Huge consequences when you are found guilty of collusion.
Right. Alex, have you started working on the risk?
Yes.
Uh, so I can actually see how well you have understood this in the risk assignment what you are doing. So what internal controls you are putting is a kind of management.
Yes.
Okay. You can take some points from the soap spam also. But just try to be as specific to our business and industry as possible, because writing general is very easy.
Yeah.
Sometimes, if you're lucky, you'll get a direct question in the exam. They'll talk about a scenario and say what are the risk and mitigation of it, 60%. So in that, you will know the question also, you'll know the answer also, because we have done it. Or sometimes they'll give a scenario and ask you what are the three major risks. So you still know the risk because you have covered this, right? Okay. Now we'll start with the next part, internal audit. Before starting, I just want to know from you guys, what do you understand by the word audit? What is the simple meaning of audit for you?
Maybe in the independent view or independent opinion on something.
Independent view or opinion. But imagine if you are just doing audit which is not independent, if it's done by the known person, I don't think it will be an independent opinion.
Yeah, no, I'm thinking now. Maybe investigation or reconciliation or yeah it's an independent investigation or proactive way of managing risk. Um, yeah, it's
Okay.
it's basically to see if, in layman terms, it's to make sure something is according to policy, comply, law, rechecking.
Rechecking, cross checking. Okay.
Mm.
Pooja?
So, according to me, it's again same that internal audit is assessing that whether all policies are followed in the organization, whether means all accounting rules are followed or not, and internal control we also check in the internal audit that everything is in control manner.
How you'll define audit in one line? Just audit, not internal or external.
Audit is independent assessing of the internal operations, that whether everything is in control, everything is according to the structure which should be there, which is already have described, means as per the policies. So everything should be according to that. We should check that. We should get the assurance of that.
All right. So basically, what you guys says makes sense. Audit is just about checking or examining the things which has been already done, and just to see if it is done according to the requirement, according to the policy, according to the law. It's not like we are trying to do something, but we are just cross checking if everything is done properly. And usually the audit is respected, the word audit, because it is done by an independent person. Therefore independence is the basic fundamental of audit. Okay. And again, audit can be divided into internal and external. External is more about the compliance part, the financials and all, which is not part of our syllabus. We are focusing more on internal audit. So internal audit is focusing from the risk perspective. Internal audit will see the controls. Internal audit will see what things are going into the business. These are the basic work. Apart from that, there will be a number of other things also we can see later on. We have all the charts what the internal audit usually do, the scope of internal audit. Okay. And as being the listed company, it is mandatory for us to have internal audit. And how they have defined here, internal auditing is an independent and objective assurance. What is objective? Objective means unbiased. They're not being biased about anything. Activity designed to add value and improve an organization's operations. So many times it is just thought as they are scrutinizing, but they are scrutinizing to improve it. Many times they will give suggestion how to have a better control, how to have internal controls at a lower cost, how to design the controls. So they have to add value. The value can be in terms of financials, in terms of improving the efficiency, in terms of adding value for the end consumer, anything. It helps an organization accomplish its objective by bringing a systematic approach to evaluating and improving the effectiveness of risk management. Governance. Internal auditing improves an organization's effectiveness and efficiency by providing recommendations based on analysis and assessment of data and business process. Ultimately, they just do the recommendation. They are not the one who will do the work, but they will do the recommendations. But when they recommend, they will come back and see, have you implemented on the recommendations or not? If the company is not recommended, they have to give an explanation why they have not recommended. And who is controlling the internal audit? I mean, it's obvious, the audit committee. An audit committee is headed by the non-executive directors. So they are the one who will be approving the audit process and everything. In order to maintain the independence part, companies can outsource internal audit or they can have it in-house. And if they have in-house, the bigger companies will try to have a separate department for audit, internal audit. Why? Because they don't want the internal audit team and the normal employees to get familiar and become friends. Because if they become familiar, that objectivity will reduce. The familiarity threat will come in. Or if it is a very small organization and they want to do audit, small and medium organization also, it's not mandatory, but still they want to do as a risk management. So they can have people from different departments coming together and just checking it for the assurance. It's not mandatory, but it's good to have. But certain companies, when they grow, they feel like they should have internal audit despite being unlisted. Okay. So some of the factors that can affect the need of internal audit or basically justify the need of internal audit. You know, in business, companies have to think of cost saving. But if you start internal audit, it's a separate cost for the organization. Compliance is there, resources will go, time will go. So they will only do it when they feel like the value being added is more than the investment we are doing. So what is it? The scale, diversity and complexity of company's activity is increasing, changing. Number of employees have increased. Let's say we have 200 employees, now it went to 2000. Massive increase. Now there is a high risk of fraud, so we'll have internal audit. Cost versus benefit analysis we have to see. Let's say every year we are having some percentage of money amount is lost due to fraud, mishandling of goods, wrong ordering, which you feel it is kind of controllable, but our team is careless or somebody's intention is not good and we are losing. So we'll just estimate the amount and see how much it will spend on audit, then they'll cross check. Because what happened when we design controls, like in the previous case, there is even a chance the manager will also become friendly with other employees and they'll just ignore. It happens or not? As a human being, it's easy to get familiar and help the known people. Yes or no?
Yes, sir.
So controls can be there, but it might not be followed. It might not be reported. Whistleblowing policy is there. Something wrong is happening. You should go and report, but people don't report. Maybe they are afraid because the person involved in that is their seniors, their managers, their directors. If there is no audit, then people will not have fear. The employees will not have any fear. They will say, oh, this is just on the paper. Even if you see at the government level, government will also have their auditors when they spend money on certain projects to keep a check of it. Then change in organization structure, reporting process, underlying information system. Change in key risk. How key risk will change? You have entered a new market. You have launched some new products. Basically, you have done something which you are not usually doing. Problems in existing internal control system. The internal control system, as I told you, is not effective. Increased number of unexplained events, again relevant to internal control system. Something is happening and we are not able to find out the reason. Nobody is taking the responsibility. What else can be the reason? There can be a number of more reasons, right? Maybe we can talk about the increase in revenue, increase in profits. That may be also be the reason, isn't it? So many reasons can be. Now, what is the scope of internal audit? So they have given some primary scope. But remember, they can go beyond this also. Therefore, they have just given one word like special investigation. Special investigation can be of any type. We'll start with this. Special investigation, what it can be. Let's say there is a manufacturing company and they have some supplier. And supplier said that will provide your goods in certain quality. We have our team of employees. We are very ethical. We provide safe working conditions. But we have a doubt or we just want to cross check. So maybe there is already a contract we'll have with the supplier that our audit team can come and check anytime. So special investigation can be done to the supplier. Or if there is a fraud, then also special investigation can be done. So anything special, they can work on it. And why we need to do this? For example, what was happening with Foxconn? Foxconn factories in China, then recently in India also faced a lot of problems. And because of Foxconn, the reputation risk was transferred to whom? Apple. And people were scrutinizing Apple, saying that why did you give manufacturing to a company which is not ethical, which is not even paying salaries on time, which is having so much of problems? They have poor working conditions. So as a big company, if you are giving business to unethical businesses or companies who are not complying with the laws, that reputation risk will come to us. So that is also part of our contract. And to cross check, we can do a special investigation. And who will do the special investigation? Usually the internal audit team. Okay. Then other points are a little easier. Review compliance with laws, regulations, and internal policies we can do. Assisting with identification of significant risk. They can also be part of risk identification, like we saw in the second chapter, when we are using proactive, reactive, or different ways to find risk. Assist in carrying out external audit procedures. So basically, internal external is separate, but some of the things can be same. So if there is an internal audit already in the company, lot of work of external audit can be reduced. It can be safeguarded. But again, they will do their own checking to see how independent the internal audit was. Review accounting and internal control systems. Then examine financial and operating information. Review economy, efficiency, and effectiveness. That means when you're spending certain things, it should be economic. Companies or managers should not spend extravagant. Imagine they are buying something, let's say a raw material, and it looks double the price of market. So there might be something fishy or something wrong. So they will call the supplier, they'll ask the invoice. Sometimes they can even visit the supplier to see, and they want to just see if the director or the supplier has certain relations. So all in all, one thing we can understand is the team of internal audit should understand the business. Because if they don't understand the business, they cannot do this economy efficiency. They cannot look at the internal control system. Therefore, even in auditors, they will be experienced in certain industry. But they should have at least some idea. Otherwise, they cannot do internal audit. They don't understand the business. Let's say somebody is doing for Saefwell or security companies for years. Now they have to go and do for a bank. They'll find it difficult. All right. What are the attribute standards we are looking for internal audit? They should be independent, as we already discussed, free from interference when deciding the scope of its assurance work and everything. And usually they work directly with the audit committee, because if they report or work with the directors or executives, they can put pressure. Objectives: they should have impartial attitude and should avoid any conflict of interest, they themselves. Then professional care: they should have some knowledge of the key IT risk and controls and computer-assisted audit techniques. Especially now, IT is getting major factors. So they should have knowledge of IT and obviously good knowledge about the business what they are working on. Performance standards: managing internal audit, risk management, control, corporate governance, internal audit work, communication results. These are all again part of the internal audit team. So it will be team, and all of them can be responsible for each one of them, like that. Structure and independence: should be independent of executive management and should not have any involvement in activities or systems that they audit. Why? If you understand the why, it's very easy. Because of the familiarity thread, because of personal interest. Report directly to the senior director. In addition, however, the head of internal audit should have direct access to the chairman of the board of directors. Can you imagine, direct to the chairperson? And who is chair? Remember, chair is not part of audit committee. So they'll have access to the audit committee also. They'll have access to the chairperson also, the most powerful person, and to the audit committee, and should be accountable to the audit committee. So if you see, directly, indirectly, all the power is going to NEDs to check the work of executives. This is how the risk is controlled. The audit committee should approve the appointment and termination of appointment of head of internal audit, whether it is internal or external, they'll do. In large organization, the internal audit function will be separate department. Company like Saefwell definitely should have a separate department if it is in-house. Otherwise, we can outsource. In small company, it might be the responsibility of individuals to perform specific tasks, even though there will not be a full-time position. Even it's not mandatory, but in small company, they'll do as a part of risk management. Some companies outsource the internal audit functions, often one of the large accounting firms. Any questions in this? Most of them are very simple and self-explanatory. Then internal audit will review the accounting control and system. Same thing. 3 is they should be technically competent. This is very important, which I was telling you. Technically competent, exercise due professional care by planning, supervising, reviewing. If they themselves doesn't know about the work, it's very easy for the employees to just lie to them, give them wrong information, play with them like that. Because a lot of time during audit, companies will not discuss their information. Especially some companies, small and medium companies, they can maintain 2 financial records, one for the audit and one actual one. They want to hide because they want to save indirect tax, direct tax, all of those. And compliance also increase when we cross certain revenue threshold. Then advantage, disadvantage, and minimizing the risk. What will the advantage if you do it outsource? Greater focus on cost and efficiency of the internal audit function. You'll have staff which is more experienced. Risk of staff turnover is passed on to others. Specialist skill. We don't have any problem now about training, because if they have skill, then only we are giving the job. Permanent employment is avoided. It'll increase independence. Access to new marketplace technologies. They'll have latest software, latest things. Reduce management time in administration. What can be the disadvantages? Possible conflict if interest provided by external auditors. Imagine the same company provide internal, external. Most of the countries' laws will not allow it, but just suppose. Pressure on the independence of outsourced function due to, for example, a threat by management not to renew contract. Sometime for
Sir,
renewal of
these are disadvantages of internal audit.
outsourcing the internal audit.
Outsourcing.
Yes.
Outsourcing or internal audit?
Outsourcing the internal audit.
Okay.
I mean, outsourcing can be of anything, no? It can be of manufacturing, it can be of sales, it can be of marketing.
Right,
What we are
outsourcing
studying
internal
here is,
audit.
if you outsource internal audit, like we discussed in the previous page, we can outsource to any big four, like say KPMG, Deloitte, you have outsource. So what will be the disadvantage? You getting the point?
Yes, sir.
Risk of lack of knowledge of organization's objectives, decision made based on cost, not on effectiveness, flexibility, they are not available all the time, lack of control, blurring roles, because external audit obviously have to be outsider. But if you have 2 people doing internal external, so blurring roles can happen. Then they have given some control. What do you suggest? For Saefwell, shall we have in-house or outsource? We don't know from the P-scene, but what do you think will be better and why for Saefwell?
Sir, I think outsource, because Saefwell is a big organization, so therefore if we hire a person from outside, then in that case the more control can be there, and as well as we have not to focus on this area also. This work should be done by other people, and they would also in charge of that. So we should
And what
outsource.
about the disadvantage?
Disadvantages, like here it is also mentioned that conflict of interest, because they might think for their own benefit, and they would have less knowledge about about this company, and means there should be flexibility issue also, and not only this, that
I mean, these
they would
problems are
charge.
there.
Hmm? What?
What my question is, how you'll manage this for Saefwell if you outsource? How you'll
How?
manage this problem? This problem. Hope you're aware of audit and everything. How do you think companies can manage from your experience?
So you mean to say that how the internal audit should be managed by the
I
company?
mean to say, you said we should outsource internal audit in Saefwell.
Right.
So we'll have
Mhm.
some advantage and disadvantages. Advantage is clear. How you'll manage the disadvantages?
So yeah. So there is disadvantage of that they have less knowledge, right? So or they can do in for their own interest. So in that case, we would discuss on regular basis. Would be meetings with them, with the internal audit staff, on regular basis. Mm.
Okay.
As well as
Alex,
a person means one person from their team can be in the company itself, in the Saefwell itself, who would work here, so that that person can observe that what is happening here in a real world,
we'll
in
have a
real
dedicated resource for
here.
that.
Huh?
Okay.
Yeah.
Okay. Makes sense. I'm just asking this question. Why? Because that why is very important to improve your quality of the answers. Alex, what do you recommend
Um,
for Saefwell?
okay, so I've noticed that uh, uh, they have. I would also go with outsourcing, maybe discussing all the benefits, but how to minimize those risks is we will have to. There's because the audit committee is not effective in this case of um Saefwell. So we will have to start there and maybe get someone in with relevant financial experience that will have an understanding of internal and external audit, which can monitor and review the process. Maybe also needs to be a clear and strong contractual agreements and that outline the responsibilities of the internal auditors. I think the internal audit plan should be submitted to the audit committee so they can review the plan as well. There should be clear communication between the internal um, audit team and the audit committee. And yeah, that's just some ways of mitigating the risk. But if they want, even if they do it internally, they will have to they will have to look at the audit committee as well and externally as well, because that committee is not effective in its own. Um, yeah, so you will have to consider all those points and then come to a conclusion. Um, which is better maybe.
Right. And especially when we are having such a complex business, having internal audit in-house can be
Definitely.
challenging.
We will have to have internal audit function because of this business. It's actually a weakness that I have identified because they
Yes.
operate in 74 countries.
I mean, we might have internal audit already, I believe. They have not mentioned,
They
but we
don't
have
mention. Yeah, they didn't mention it. Maybe in the question they will state it, or they will say there is a internal audit function, or maybe they will state there is not one, and you must evaluate.
Right. They have given some controls also. Then ethical threat can also be there for internal auditors. There could be pressure from overbearing supervisor, managers or director. There could be pressure from overbearing supervisor at the same point. Auditor might be asked to act contrary to technical or professional standard. Divide loyalty between auditor's superior and the required professional standard. So even these people can get influence. In fact, if you just see the real world, the big fours, what we talk about, their revenue is only around 5% coming from audit, and another is coming from other services. But there has been a blame on them that they're getting other services from the company just because they're helping them in audit. So there is always an ethical dilemma, or there is a ethical threat on them, which they try to justify, but there is a question mark. And obviously, nobody wants to lose their clients. And in order to retain the clients, they might do something which is not a part of their professional standards. Then, what is the difference between internal and external audit? A quick one. External audit is usually required by the statute, by the government's requirement, appointed by shareholders or directors, the external party. Report to shareholder, that's the primary duty ultimately, and they are doing more on financial statements. Scope of assignment is usually unlimited, otherwise it will not hold much value in front of the stakeholders. Whereas internal audit, if you see, directors, shareholder will do it, and ultimately the audit committee itself, we can say, they are saying chief internal audit, but again the audit committee, they report on internal controls primarily. Advocacy of ICS, that is internal control system, as contribution to the economic, efficient and effective use of resources, how they're using the resources, and how we do that through 3 E's: economy, efficiency, and that. Scope is usually prescribed by directors. In the most cases, here also scope is unlimited in the internal audit. Okay. Fraud investigation, they have given another step of fraud investigation. Actually, it is the same thing what we have discussed in the previous chapter, internal control. Ascertain facts, gather evidence, collaborate. So why we are studying this again in internal audit? Because in special investigation, fraud investigation can also be one part of it. So this is how they can do. First, gather facts, gather evidence, collaborate evidence, all of this. Consider loss of reputation if it becomes public. Now, types of audit. And these detailed things usually not asked in case study, but it's good for our understanding. First is compliance, check the implementation of rules. Another type of system based sales ledger, basically ERP related it can be. Then transaction related it can be. Management and effectiveness of manager. This is one of the most difficult to do this, because you need again experience and expertise people to see the effectiveness of managers. It can be risk based. We can argue all internal audit is on risk based, but again we can have specifically on risk based. We can do on the quality of the product or service, just audit on the quality, especially in the service. No, the quality is different every time, maybe a small fraction of percentage fraction is fine, but imagine if you are giving good quality in one country and good not so good quality in another country. That might be a ethical issue, or that might be a problem with the training or other things. Then we also have post completion audit. What is post completion audit? When the project is done, they'll do post completion audit to see what they learn from the project. Then value for money audit, economy, efficiency, effectiveness. Social and environmental audit. Again, this is something new. Social and environmental audit, I think they have given here also. Social and environmental audit is more about how our business is affecting the society. For example, our security service social audit, I think it will be on a positive way, because we are making people safe. We're having good effect on the society. But certain businesses, let's say if we are selling, some business selling, let's say some drink which is very sugary. So ultimately, you're affecting the society. You're making them fat. Like Coca-Cola has apologized so many times. They are one of the reason that people are getting fat. They're getting obese, right? And it's so obvious nowadays. People are drinking with the food. In some restaurant, you won't get water, but you'll get this sugary drink. That is the social audit, our effect on society. Then same thing with the environment. Same company was accused of this thing. Coca-Cola again individually is responsible for majority of the plastic bottles in the world because they are the biggest company. One-time use plastic, and only 0.06% is getting recycled. I got this percentage from some documentary, so you can imagine they are not actually recycling. So that environmental also they have talked about. Same thing will go with the safe. Then how the audit process works? Basically, audit process can be divided into three things: planning, testing, and reporting. Planning will take more time because you need to get the approval, you need to train the employees, you need to have an idea, you need to see how much the team is, what resources you have, how much time you have, right? Agreeing on the objectives of the audit with the audit committee, planning the audit, find out about systems and controls. Maybe new systems have been coming. There is always change happening in the organization, small or big. Confirm the operation of the system. Assess if controls are adequate. This also they need to understand. Test. Now testing is obviously simple. Now if they agree that this control is adequate, now we'll go and cross check it. Test compliance with controls. Test application of control. Sometimes what happens, compliance is good, but the employee themselves is not applying it. So application of controls. Application of controls, sometimes the audit team can do indirectly. They won't tell, and they'll just see a random person how they are dealing with. Or they just want to see in normal times, are they following it? Or they just trying to show when the audit is happening. Because sometimes they will be careless. So just want to find out that always they are doing it or just to show. Control sometimes can be good, but the management can be lazy. The team can be lazy. And whatever
So
you find,
here the difference between test compliance with control and test application control is not clear that much.
compliance with control and application of controls. So basically, if certain application of controls, if you understand first, we have it on paper, and if it is applicable or not. So application can be of two types. First is you are doing it or not, and second is you are doing it to save the, let's say you are doing it for saving a fraud. Okay, but application they are doing it, but still somebody is able to do it. For example, you have done maker and checker. Some person will order the products, other person will receive the product. So what happened now, compliance is there, but again these people have become friends. So one time this person is helping them, one time other person is helping them. So the application of control is not affected. That's what they're trying to say. And compliance means, are they following the compliance with it? Application is some part of compliance also, and we can even say how effective it is, because our aim is, let's say, to reduce by 30%. So actually is it reducing by 30%? If not, then it failed, like that.
Okay.
Then whatever we have found out, we have to review it, report it, and recommend it. And once we recommend, again we have to see that after 1 month or whatever time they are saying, they should come and cross check, have they done it or not. If they have not done, they have to justify it. And what does audit planning include? Objectives of audit, conduct of audit, resources and timing, how many people are there, how much time they have. An audit can be based on so many things like benchmarking, it can be process, product, functional, computer, inherent risk, risk of activity ignoring the control in the system, control risk, risk that existing controls are not sufficient to prevent or detect the material misstatement, detection risk, Risk that test will not reveal material incorrect amount. So basically, when we are doing this is also part of risk management. We cannot have 100%. We're still trying to find out the major mistakes, major problems, again to minimize the risk. If you're using, let's say, sampling, it will have certain risk. If you try to do all the transaction, which is almost impossible unless you're using a software, right? System investigation and documentation or certain system, the auditor could use the following sources and methods to ascertain how the systems operate: flow charts, interviews and questionnaires, system documents, observation. So basically, the auditor can go and just look at the charts, or they can do an interview with an individual. They can ask, okay, in a normal days, how you do this? Open-ended and closed-ended question. How you'll normally deal in this scenario? They'll just ask. They'll not tell the managers. They might go to the employee directly to see if this person is trained. So they see this person is actually following it. And obviously they'll ask uncomfortable question. And they'll understand if the person knows it, has been possibly trained it or not. Then they'll look at the documentation. And sometimes they can just do observation normal time. They'll be sitting somewhere and see, okay, are they following the policies or it is just on the paper? So there are different methods they can do. If they do interview questionnaires, it has certain advantage. If they just observe from somewhere, it will have certain advantage. If they just read flowcharts, it will have certain advantage. So how to decide which one is best? Let's say out of these four. So the audit team should decide based on the business model. Ascertaining controls. To specifically assess the controlling system, an auditor could use standard control questionnaires. These documents are structured so as to identify all key internal controls and also enable the auditor to assess the quality of the control. What is quality of control? Quality of control is how much risk it is actually reducing, probability or impact, how it is coming down. Then audit testing, compliance and substantive. Observe the functioning of quality control staff to ensure they are checking the output. Substantive, monitor the number of quality controls failure as proportion of good output. So here in substantive, we are focusing on how many controls actually failed. Maybe we put the control, but again, it was not effective. And compliance is observe the function of quality control staff. Are they actually complying with it or not? I mean, we can discuss and go in detail, but not required for the case study. Then audit, how audit is done usually is done by sampling. But if you do with sampling also, there is a risk. And if they want to go with non-sampling also, there is a risk. What is the risk in sampling? Let's say they are just sampling the transaction which is above certain number. So management, if they have an idea, they will do a lot of transactions with a small number to avoid the sampling risk. So this is the risk that auditor's conclusion based on the result of sample, which may be different from the actual one. But again, the probability of this is happening very less. Non-sampling risk. This is the risk that the auditor may use inappropriate procedures or misinterpret evidence that the test result gives. They'll fail to recognize an error. So which one to decide? Usually the sampling they will use, but again, depending on the risks.
What
example,
exactly is non-sampling risk? Not understood.
Non-sampling risk is like if you're, if it is like a $1 transaction and like $100,000 transaction, if you're trying to use the same thing, right? And if you're getting, let's say, few errors usually if they're accepting and saying there is no material problem, major problem. So there is a risk that we are not recognizing an error. So we need to divide it. Major risk we have to look first. What they do in planning, they will look at the major risk, major transaction. So in sampling, what they do, they look only at the major transactions. But here, if you try to do everything, there is a chance that we can come to a wrong conclusion and we'll face to recognize an error. I mean, you can also tell me what you might have studied about this already in external audit also.
Non-sampling risk is not sampling is fine. That by samples, that sample is not as per the real, which the actual is here. But non-sampling risk means we are taking all into consideration. Then risk, it means
Inappropriate or ineffective audit procedures, training and supervision. Okay, I'll send you something on this. Maybe a video. I'll find something because here it's not mentioned in detail. Failure to recognize deviations, failure to evaluate findings properly.
okay, sir. No problem.
Anyway,
Hmm.
then analytical review. This is actually a smarter way of doing it. So what we'll do, we'll not go with sampling, non-sampling. Keep it simple. Look at the numbers, and if you think like numbers have changed to a majority, or if you think there is a problem with the efficiency, prioritize that. For example, if you are looking at the efficiency of the employees, okay, we have 5 offices. In each offices, we have, let's say, 25 employees, 25, 25. But if you see, on average, the 4 offices is giving certain amount of revenue, and the fifth office is giving just 50% of the revenue, despite having 25 employees, same employees. So what it will be? It will be a red flag. We'll prioritize that. Oh, this should be the first audit. Why? Because there is a high chance of inefficiency. Same thing with other numbers. Immediately our uh, revenue is jumping. Let's say on a normal market increase by 10%, we have shown 50%. So we'll just cross check it. Immediately our gearing is going down. Immediately, immediately means in quarter or compared to last year. Our profitability percentage from single digit it went to double digit, and we have not seen anything exceptional in the other numbers. So what we'll do, we'll prioritize it. We'll put that in red flag, and the audit team will put this as number because there is a high chance there is something wrong in it. So we'll just look at the numbers. It can be about profitability, efficiency, liquidity, returns, all of this. Then audit reporting, the last part, objectives of audit work, summary we have to give, results of test carried out, opinion, what opinion they have about it. They'll give opinion how to improvise it, obviously, because their job is to add value, and recommendations for the improvement of it. Then we have audit of computer systems. But again, if you go with computer system, there will be certain advantage and disadvantage. Lack of primary records can be there. Encoded data can be controlled by the ID team. Loss of audit trail. Sometimes if there is malware, or if there is the data got any issue or just got deleted, anything like that can happen. Overwriting of data can be done by the management. They have some transactions, then later on they have just changed it. Program controls, the software they are using. Concentration of controls in the ID department. ID department might control it and just show it as a very good. Therefore, the audit team themselves should understand about the technologies, the software, and the program. If they do it, this problem can be reduced. But when they are doing audit, they might have 2 options: round the computer and through the computer. Round the computer suitable when processing in relatively simple audit trial is viable, up-to-date documentation exists. So they'll just say, oh, you're using computer for and software and everything. But second is through the computer, so they want to investigate everything that is inside. But it requires more expertise, longer setup time, but results can be exceptional, very good quality. So here it's all about creating a software specifically for that company, specifically according to their business model, which can be very costly and time consuming, but the results will be good. we have a concept called CAAT, Computer Assisted Audit Technique. The Computer Assisted Audit Technique is basically using a software to audit it. I have a small video for this. I'll just show you 1 second. What can be the advantage and disadvantage of using computer assisted audit technique? One second, I'll share this. Can you see the screen?
Yes,
Yeah.
the same screen is there.
Is it audible?
Actually, no, nothing is different. The same CAT is here.
Okay, okay, 1 second. You cannot see the YouTube, right? So what is computer assisted audit technique and how this work? We'll just understand from a small videos. What they have given in this 2 page, no benefits, weakness. We can just understand this from a small videos. I'm just sharing a YouTube.
And performing audit. This video will be covering the area of computer-assisted audit techniques, widely known as CATs. When gathering evidence and performing audit procedures, the external auditor can often use computers and special techniques. This can improve efficiency and speeds up the audit process. The two main areas where this can help is with the controls work the auditor completes and the substantive testing stage of the audit process. When the auditor is assessing the control systems used by the client, they can use something called test data. When the auditor is performing substantive tests or procedures, they can use something called audit software. Test data is where the auditor will access the client's computer controls. They will perform audit tests on the system itself by entering dummy data into the system and monitoring how it progresses through the control cycle. This method of testing will allow the auditor to see if the control functions of the computer system perform properly. For example, they could enter a fictitious sales order in the sales ordering system and then monitor whether it is posted correctly and whether the controls over ensuring it is authorized before being accepted are effective. There are two ways the auditor can perform test data: live and dead data. Live data is where the auditor has access to test the computer systems during the operating hours for the client. The benefits of testing computer controls during working hours is that it allows the auditor to assess whether demand has an impact on the efficiency of the controls. It could detect that the system does not cope when there are multiple users, all posting onto and reviewing the data on the system. The drawbacks are that these dummy entries into the system may be forgotten and not reversed. There's nothing more embarrassing than the auditor being responsible for the misstatement detected in the following year's audit. Dead data is where the auditor can enter dummy data into a batch after working hours. This is easier to reverse as all entries are all together. Alternatively, the client may only permit the auditor to test the system by taking a copy to install on their own computer. This will remove the risk of leaving misstatements in the system altogether, and very often the client feels most comfortable with this option. The drawback to this approach is the auditor will not have assessed whether the system can have problems when busy. However, this is still an effective way of testing the computer system controls. This is a cheap way of testing the computer controls of a client, as it only requires the auditor and their skills. Without test data, the auditor is only testing the controls around the paperwork that is produced from the system, plus any manual control systems the client may have. Therefore, this method ensures there is a thorough review of the entire control systems that relate to the financial statements, and not just some of it. Our other method of CATS is audit software. This assists the auditor at the substantive testing stage, where the auditor is performing audit procedures that help detect potential material misstatements. Audit software is a piece of software that is used by the auditor. There are many variations of this software around. Each of the larger audit firms have designed their own versions. They may also have bespoke audit software for clients with complex financial data. The smaller audit firms may purchase audit software from the larger firms. We just need an understanding of how generally audit software works. The auditor should be able to import all of the client's transactions and balances onto the audit software. Now they hold all of this data, the audit software is programmed to perform some audit procedures on it. Some of the procedures that can be performed are analytical procedures, selecting samples, checking calculations, and exception reporting. The audit software would be programmed to calculate ratios. At a press of a button, it can produce the results needed to compare to previous year's results, budgets, and industry averages. The auditor can then investigate unusual results with the client to decide whether potential material misstatements may have occurred. The audit software can select samples of transactions to perform audit procedures. This is a systematic method of selecting the sample, as it requires no influence from the auditor in choosing the sample to test. Audit software can also check calculations. It can be programmed to add up transactions to agree balances in the system and recalculate other transactions, for example VAT calculations. The software allows more of these calculations to be performed, as it works faster than an audit team member with a calculator or an add list. It also reduces the risk of human error on the audit. The software can also be programmed to produce exception reports. It can highlight unusual trends in the financial information that has been imported. It can also detect balances that look unusual. An example would be producing a list of balances on the receivables ledger that have credit balances, suggesting overpayments or possible missing invoices. These balances and transactions detected by the system can then be investigated by the auditor with the client for potential material misstatements. Audit software has many benefits, including it can save time on the audit due to automatic procedures being carried out by the software. It can then also save on labour costs for the audit assignment. And it also reduces the risk of human error due to the software automatically performing some of the audit procedures. Drawbacks include the expense. If a bespoke system is needed, or if the audit firm has to purchase the software, this can be very expensive. They therefore need to ensure the benefits of using the software outweigh the price. Clients are often apprehensive allowing their system to be connected to the client's system when importing the transactions. There is a risk of data corruption when carrying out this process. As the auditor is now holding all transactions and balances on the software, there is a risk that this data could be leaked, and therefore confidentiality would be a concern. Strong security controls are required. To summarise, CATs are computer-assisted audit techniques. They assist with assessing control systems at the client by performing test data. They also assist with performing substantive audit tests using audit software held by the audit firm. CATs ensure the transactions and systems are tested more thoroughly. They also potentially reduce costs and speed up the audit process. I hope you found this video useful. Thank you for watching.
Hello.
Yes, sir.
Yes.
I hope you got the idea. If you want, I can share the video link again. That was all about
It
computer
should be
assisted
sure.
audit.
Yeah. And sir, means this cards, these cats. So here, I mean to say that it is highlighting the like negative figures, the high amount. So in that case, it depends upon the company to company as well as industry. For example, for the Saefwell, so here the means the transaction would be of high amount. So it can the same software cannot be applicable applied in all the companies, right?
Obviously, the biggest problem here is every company's operation is same. Even if both business are very similar, they'll have different internal operations, different policies, different internal controls. The biggest problem why it is costly is everyone is different. It is bespoke. If there is a standardization, we can reduce the cost. Therefore, most of the companies don't use this. Even the bigger companies are not using it because next year they'll do certain changes. Again, they have to spend so much money. And it's not a profit center, right?
Yes, sir.
But going forward, if the cost comes down, which should come down, the cats can be used. Two main categories, benefit and weakness. They have explained in a good way. Basically, they won't ask you all of this in detail about cats and all. They just ask you how internal audit work, how things operate, all of those. But this is part of syllabus, so we just covered it. All right. So last part is cyber security. I thought of controlling, but I don't think it's possible. There are 3 chapters, and we need to do it in a good manner because it's one of the important part of our business. Others also need to join. So we'll do the last part of P3 in the next class. Okay.
Okay.